Hello, Turtle investors. Welcome to the Turtle Tycoon, the only channel that whoever is the loyal follower with the most disciplined and with the most patient type of character becomes billionaire. 100% guaranteed. Prepare your pen and paper because it's gonna be an interesting topic. Before I start, I highly recommend you watch the part 1 of this content. Today's topic is the another 12 animals used as metaphor in stocks. Part 2. Number 13. Canary. The phrase canary in the coal mine refers to an early warning sign or indicator of potential problems in the market of economy. This is the power of heads up. This is the power of warning shots. With that, you will have the future forecast. You will have the ability to execute a good decision making to your portfolio. But remember, predicting rain doesn't count. Building arcs does, according to Warren Buffett. Number 14, shark. A shark in the financial world refers to a seasoned and aggressive investor or trader. Who do you think is that, turtle investor? Who do you think or friend of yours who is a shark? He is highly skilled and taking advantage of the market opportunities and at times may engage in predatory practices. A shark investor use its small size, quickness, and aggressiveness to outmaneuver and outrun the whales of the Wall Street. It has the power of agility. But remember, the stock market is a device for transferring money from the impatient to the patient. Number 15, jellyfish. A jellyfish investor is someone who lacks conviction in their investment decisions, often quickly change their positions or strategies based on short-term market fluctuations. They don't have the firm decision making in the ownership. They have the inability to decide religiously in the stock market investing. But remember, if you are willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Number 16, the ostrich investor. He is someone who tends to bury their heads in the sands, ignoring financial problems or market downturns and hoping that issues will resolve themselves. They have the fear when they see red colors on their portfolio. They have the lack of accountability attitude. They have the inability to cost averaging. A market downturn doesn't bother us. It is an opportunity to increase our ownership of great companies with great management at good prices, according to Warren Buffett. So remember, turtle investors, when it is red, it is an opportunity. Number 17, chicken. A chicken investor is a term used to describe someone who is overly cautious and hesitant to take risk in the markets. They don't have the risk. They should have the calculated risk. According to Warren Buffett, risk comes from not knowing what you're doing. Number 18, a pig. A greedy pig refers to a trader who is excessively greedy and takes on too much risk, often to their detriment, and leads to severe damage. Always overlook risk entirely with a singular focus on short-term profit. They make rash investment decisions or buy stocks without conducting or enough or any research at all. They have the preference mentality is to acquire largest reward using largest risk. Remember this, turtle investor. Never test the depth of the river with both feet, according to Warren Buffett. Number 19, we have the dog. A market watchdog. This is interesting, turtle investor. Refers to regulatory agencies, organizations responsible for overseeing and maintaining the integrity of the financial market. It implies vigilance, surveillance. They have the power of surveillance. They have the power of monitoring. They have the power of vigilance. With this, you can have to think step ahead. You are ahead of the curve. Remember, the best moves are usually boring, according to Warren Buffett. Number 20, we have the goose. The golden goose is an investment or an asset that constantly produces substantial income or returns. That's right, turtle investors. It provides the highest income or returns. They have the power of cash flow. They have the power of financial freedom. That's the ideal for a goose. That's the reason why it is called golden goose, because it lays golden eggs. Remember, nothing sedates rationality like large doses of effortless money, according to Warren Buffett. Number 21 is a cockroach. Oh, that's nice. A cockroach is a financial cockroach used to describe a resilient company that comes withstand adverse economic conditions or financial crises. That's right, turtle investor. Just like in the previous pandemic, there's what we call resiliency. They have the power of positivity. They have the power of recovery. You are the lights of the amidst of darkness. Once you fall 7 times, you rise at 8 times. That's a financial cockroach. In the world of business, the people who are the most successful are those who are doing what they love, according to Warren Buffett. Number 22 is the eagle. An eagle-eyed investor or analyst is known for their keen observation and ability to spot opportunities or risk in the markets. Remember, turtle investors, what gets measured gets managed. They have the power to identify companies' strengths and weaknesses. They have the overview of the horizons. They have the overview of the markets. And with these skills, they can make themselves rich. And remember, according to Warren Buffett, I insist on a lot of time being spent almost every day to just sit and think. That is very uncommon in the American business. I read and think, so I do more reading and thinking and make less impulse decision than most people in the business. Number 23, an owl. An owl investor is associated with wisdom and cautious approach to investing, preferring to research and analyze investment thoroughly, meticulously before making decisions. They have the sniper attack mentality. That's right, turtle investor. The sniper just waits and wait before they attack. They are silent. They are very cautious, talks softly, away from the crowds, and attacks long range. But the approach and mentality is very precise. They think meticulously about investment before making decision, but they are very prone for analysis paralysis. Remember, according to Warren Buffett, investors making purchases in an overheated market needs to recognize that it may often take an extended period for the value of even an outstanding company to catch up with the price they paid. Last but not the least, the peacock. A peacock investor or trader may be characterized by showmanship, often seeking for attention and recognition for their market predictions and strategies. They are fake eagles. Mostly they are just started to invest. They seek attention. They're not serious. They don't have the system. They think investing is just a hobby. They don't last long. Remember, according to Warren Buffett, I'm not interested in cars and my goal is not to make people envious. Don't confuse the cost of living with the standard of living. Well, if you think this content gives value to you regarding the part 1 and the part 2, type on the answer on the comment below which of the following 24 animals you are or your friends are in terms of investing. Let's see how many of you understood and learned a lot on this content.